Possibility 1, 5 points. Now, when it says when qualifying an opinion, and make sure you're ready. Get ready, everyone. This is going to be painful, so be ready. Hopefully you took some caffeine before coming in.
Okay, so this is...
I'm warning you.
This is question 1.
Question 1.
And then possibility.
Page 1, possibility 1, worth 5 points for all the possibilities. When qualifying an opinion, because of insufficiency of audit evidence. When qualifying an opinion because of insufficiency of audit evidence, an auditor should refer to the situation. An auditor should refer to the situation in the, and put a colon, the dot.
In the?
The, yes, T-H-E. And then they have, you know, the dot over the dot, the colon symbol. Now, set up 2 columns. This is a weird question. Set up 2 columns. One column says basis for qualified opinion paragraph. Basis for qualified opinion paragraph.
Hang on 1 second, please.
Go ahead. Basis for qualified opinion paragraph. Oh, the people just came in, Amanda and Poonam. Don't forget to give me your projects. Yeah, just stack them up here on there for me if you would, please. Thank you, thank you. Appreciate that. So one column says basis for qualified opinion paragraph. Thank you, everyone. The other column says notes to the financial statements. Notes to the financial statements. Now, so remember the one column's basis for qualified opinion paragraph, the other is notes. Answer A is yes in both columns. Answer A is yes, yes. Answer B is no, no. No for both columns.
Hang on, let me make sure.
Answer C is no, yes. No for basis for qualified opinion. Yes for notes to the financial statement.
No, yes, right?
No, yes. Now I'm going to ask for a prediction from Letitia. What do you think the answer D is? We had yes, yes, no, no.
Yes and no.
Yes and no is correct. Yes, exactly. So yes, yes, no, 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 yes, yes, no. All you have to do, I guess, is mark the little hole for the right answer. Okay, that's possibility 1. Everyone set on that? It's kind of strange, but that's all right. Possibility 2. This one you could answer right now. I'll paraphrase it. The auditor cannot find sufficient audit evidence. Auditor cannot find sufficient audit evidence because of inadequacy of the accounting records. You cannot find appropriate audit evidence because of inadequacy in the entity's accounting records. Now,
disclaimer.
Well, that's the right idea. It says the auditor should choose between.
Is this the question or is
these are the answers. Well, the question says the auditor should choose between, and then they have 4 answers. One of the possibilities, Elena just gave us a disclaimer. What is the other possibility?
As far as opinions go,
let's say it was just in one area.
Unqualified?
Go ahead again.
Unqualified?
Unqualified.
No, unqualified is the best opinion, remember, which is now called unmodified.
Okay.
So it's not that. Now, if it was major.
Or no, the bad one. Oh, God.
No, the bad one, it means you do know.
Yeah.
The adverse means you know that things are not in accordance with GAAP,
Okay.
but you don't know. If you didn't know to too large a degree, it would be the disclaimer. But what if it's just one area that you don't know because of the fact that you can't find sufficient evidence in the records? You know, there's two, for these, I think in that first week, our first class together, I had down something about scope limitations. And I said there were two choices. If someone remembers, I had them written on the board. The second choice was what Lena gave us, the disclaimer. But there was another choice.
The unqualified opinion with,
It's not unqualified or,
No.
or unmodified. You're saying unqualified with a separate paragraph. No.
no.
Anyone remember from that first Saturday afternoon? Okay, well, the choices are qualified or disclaimer based on materiality.
Qualified.
Now, that gives you the answer to the question, but please go back and look that over, especially for like Letitia's going to the exam soon. The exam, not our exam. Ours is the minor leagues. The exam.
Okay, so 3 was qualified, right? I'm sorry.
No, I didn't give you the possible choices.
Oh, I thought.
I didn't give you the choices. I just said that whenever you have scope limitations, there's two possibilities. One is qualified, the other is disclaimer. Not on the exam, but let's ask this. What if you found a failure to file GAAP? What are the two choices? This goes back to that first week again.
Adverse.
Adverse if it's extremely material, or if it's just minor but significant enough.
Disclaimer?
No, disclaimer needs you know. Qualified. You guys need to go back and look that over.
Yeah.
All right, not for this exam necessarily, but for the exam. The exam, the big one. All right, now let me just repeat that again. Scope limitations, there's always a choice of either qualified or disclaimer. Failure to follow GAAP, there's a choice of qualified or adverse. Now, Lena pointed out some more complexity. There's other scenarios, remember, where you can have unmodified with extra paragraphs and stuff. So take a look at that area. Third possibility for problem 1.
Wait, I thought we were on problem 2. Oh.
No, that was possibility 2, problem 1. You always know there's a lot of possibilities. This is the last possibility for problem 1. They want to know which activities would most likely not impair a CPA's independence. Which of the following activities would most likely not, NOT in capitals, impair a CPA's independence? Now, I'm not going to give you the answer, the correct answer, but I'm going to give you the 4 choices. So this is like the A, B, C, D. Then you can decide on your own. Choice A, signing a client's checks in an emergency situation. That's choice A. Signing a client's checks in an emergency situation.
Hold on.
That's choice A. Choice B, providing extensive advisory services for a client. Choice B, providing extensive advisory services for a client. Advisory services. Choice C, accepting a luxurious gift from a client. Obviously, that's not the right answer. Accepting a luxurious gift from a client. And choice D, contracting with a client to supervise contracting, I guess, should be the pronunciation, contracting with a client to supervise their office personnel. To supervise their office personnel. I'll let you decide. I think you probably know which one, but you can decide. Question 2.
Okay.
5 points. Are you set,
Hang on
Letitia?
1 second, sorry.
Question 2, possibility 1, 5 points. Okay. Alrighty. Which of the following procedures would an auditor most likely perform? Which of the following procedures would an auditor most likely perform to obtain evidence about subsequent events?
About something.
Which of the following procedures would an auditor most likely perform to obtain evidence about subsequent period events? I'll give you the 4 possibilities. You decide on your own.
Okay.
Possibility A, investigate changes in long-term debt. Investigate changes in long-term debt that occur after year end. Investigate changes in LT debt, long-term debt, that occur after year end. This one's weird in my opinion. Choice B, recompute depreciation for plant assets sold after year end.
Can't see. Spell Asset.
Oh, ASSETS. You know what I often see from the 504 people? ASSESTS.
Yep.
Assests.
Okay.
I sometimes do that myself, though. I'm not a good typist. So. But recompute depreciation charges for plant assets sold after year end. Choice C, inquire about payroll checks. Inquire about payroll checks.
This is C, right?
This is choice C. That were recorded before year end. Inquire about payroll checks that were recorded before year end, but cashed after year end. Recorded before year end, but cashed after year end. And choice D, determine that changes in employee pay rates after year end pay rates after year end were properly authorized. Possibility 2, question 2, also relates to obtaining evidence about subsequent events. Also relates to obtaining evidence.
Oh, that's the question?
Yeah, well, yeah, I'm trying to shorten this.
Oh.
It also is related to what you would do to obtain evidence about subsequent events. So the question is very similar, isn't it, to the one we just had in the previous, but different possible answers. Yeah, again, they want procedures that an auditor would perform to obtain evidence about subsequent events. And again, we have A through D. Okay, everyone one set. So very similar question, but different possible answers. Choice A. Tisha, are you set?
Oh, answer A, okay.
Answer A.
Okay, got it.
Inquire from legal counsel, entities legal counsel regarding litigation, etc., arising after year end. So in other words, you're talking to clients' legal counsel about litigation, etc., that occur after year end.
Okay, got it.
Choice B, confirming bank accounts set up after year end. Confirming bank accounts set up after year end. Choice C, investigate changes in stockholders' equity occurring after year end. So investigate changes in stockholders' equity occurring after year end.
Investigate,
Changes in stockholders' equity occurring after year end. And choice E, or excuse me, E,
D.
choice D. Taking a sample of large dollar items, taking a sample of large dollar items, and checking for arithmetic accuracy. In other words, checking the math of the transactions and checking the math. That one is not the answer. Tell me when you're ready, and we'll go to possibility 3, which is the last possibility for this one. All right. Here's the question, and then there's 4 possibilities. An auditor should consider which of the following. Well, this relates to the going concern stuff. I think you posted on this later. An auditor should consider which of the following. Well, basically, when evaluating if a company is a going concern. In evaluating if a company is a going concern. I'm not crazy about these multiple choices, by the way, but at least you can look them up. Maybe there's something easily in the text. Choice A.
How many, I'm sorry, how many multiple choice did you say?
It varies. There's some more coming up, but there's also questions. They're intermixed.
Oh, okay.
Okay, choice A. A lawsuit for which judgment is not anticipated. A lawsuit for which judgment is not anticipated for 18 months. A lawsuit for which judgment is not anticipated for how long?
18 months.
18 months, long period, right? See, we're forcing you out? You can't take any more?
I'll finish.
All right.
Yeah.
It was nice to have your company, that's okay. Choice B, management's plans for disposal, management's plans for disposal of assets. Management plans for disposal of assets. Plan for disposal of assets, or sale of assets, in other words. Choice C, future assurance services. Future, that's like audit, remember, future audit or assurance services. And D doesn't make a lot of sense to me. Maybe you can explain it. Audit fees? Why would our audit fees have something to do with the going concern concept? Well,
Not answered.
So
that's
this
not
is
the
gonna be-
answer, obviously.
This is going to be disposal of assets then, right?
All right, problem 3, 5 points, 3 possible multiple choices. Here we go. They're talking about ethics in the profession, and they want to know which of the following acts is prohibited. Oh boy, these are long answers, damn it. Which of the following acts would be prohibited.
Which?
The following acts would be prohibited. Now, this is the auditor. This is acts of the auditor that would be prohibited by ethical standards. Answer A, issuing a modified report when issuing a modified report, explaining a failure to follow, I'm sorry this is so long, everyone. Issuing a modified report explaining a failure to follow a governmental regulatory agency's standards. And then there's another phrase after that, but that's enough. Issuing a modified report explaining a failure to follow a governmental regulatory agency standards. Choice B, accepting a contingent fee for tax services. I'm cutting it, making it shorter. Accepting a contingent fee for tax services. Now, I remember we talked about
future
that.
tax services?
Remember, I don't like that, but remember they said in the textbook that was acceptable when it was determined by an agency or a court body, you could do a contingent fee. So that's not the answer. Choice C, retaining client records after the audit. Retaining client records after the audit. Retaining client records after the audit is completed and when client demands their return. So you're retaining client records after the audit is completed when the client demands their return.
Demands
the return of the records. In other words, the audit's over, the client asks for the records back, certain records, you refuse.
I didn't know that auditors get that back.
Well, the auditors will keep their work papers, but they may have asked for some other client records that they needed to examine. Now they're refusing to return them. And choice D is revealing confidential client information. Revealing confidential client information when there is a quality review. When there is a quality review by a state CPA society. When there is a quality review by a state CPA society. Remember, that was one of the exceptions to the confidentiality rules, that you can, without client permission, reveal that information.
Without there is a quality review by a state CPA
society. So that's not the answer because that's allowed, remember.
You already gave us the answer, thank you.
Kind of, I'm trying to help. I'm trying. Okay, next possibility, problem 3. An auditor's independence is considered impaired if the auditor has. An auditor's independence is considered impaired if the auditor has. Four choices again. Choice A joint closely held business investment. A joint closely held business investment with the client. A joint closely held business investment with the client that is material to the auditor's net worth. That is material to the auditor's net worth. Let's stop right there. What do you think of that one?
It's impaired.
Obviously.
Yeah, forget the other answers. That's obviously it.
So you don't have to give us any more.
Yeah, well, there was an automobile loan, they had a mortgage loan, and then they had an immaterial indirect financial interest. I mean, that one is so blatant. There's no reason to state the others. Possibility, did you mind me not giving the other answer?
Yeah, we don't.
That's all right, no, go on. Ah, well, that one just stood out so much. All right, possibility 3 for problem 3. You see, this page has 5 questions only, so we're almost done with page 1, you know. Okay, again, which of the following, this is according to ethical standards, which of the following acts is generally prohibited? Remember the 4 answers that I gave you to possibility 1 for problem 3? Remember those? Why don't someone read those out to me?
You're talking about 1.3?
Yes, problem 3, possibility 1.
Okay, signing a client's check in an emergency situation.
No, that was problem 2, wasn't it?
No, that's probably problem 3, possibility 1.
No, that was a different one. That was back. Wait, I remember that signing the check. That was.
Are you
problem,
talking about prohibited
I went
acts?
problem 3, possibility 1.
Oh, sorry.
All right, I
Issuing
might have said it wrong.
Issuing a modified report explaining a failure.
Okay, so issuing a modified report explaining a failure to follow a governmental, remember the regulatory agency's decision. Okay, keep going. Choice B.
Accepting a contingent fee for tax services.
Okay, C.
Retaining client records after an audit when a client demands a return. And D. Revealing confidential client information when there is a quality review by a state CPA society.
Yes, same 4 answers. Same 4 answers. So problem 3, possibility 1, and problem 3, possibility 3, all have the same answers.
It's the exact same question.
Well, it's very similar. There might be a difference of 1 word or something.
Oh, which
yeah,
would be prohibited and which are generally prohibited.
Something like that.
What's the difference? There isn't
Same
one.
answer, no difference.
Yeah.
All right, okay, everyone set on that?
Mhm.
I'm just trying to save you some writing. Why we copied again.
Thank you, I appreciate it. Exactly what you just did.
All right, let's go to problem 4. Possibility 1. Now this one, oh Lord. Well, this one, all right, well, okay. We're looking at the responsibility of the auditor. No, this is a little trickier one to save. 5 points again, of course. Problem 4, page 1, possibility 1. We're trying to indicate which best describes the responsibility of the auditor, which best describes the possibility of the auditor with respect to significant deficiencies, which best describes the responsibility of the auditor with respect to significant deficiencies and material weaknesses, significant deficiencies and material weaknesses in an audit of an issuer. So I guess it means which best describes the responsibility of the auditor when they find significant deficiencies and find material weaknesses during an audit. Now there's 2 columns, but this is not a yes, yes, no, no. This is much more involved. There are 2 columns again. Column 1 must be communicated to management and the audit committee. Column 1 must be communicated to the management and the audit committee. Column 2 results in an adverse opinion for the effectiveness of internal control. Results in an adverse opinion for the effectiveness of internal control. I put I/C. I have my own shorthand, but it's of internal control. All right, it's not a yes, yes, no, no. Sorry, everyone. Choice A. Under column 1, material weaknesses but not significant deficiencies. This is under the column, must be communicated to the audit committee. Material weaknesses but not significant deficiencies. Column 2 is the same, material weaknesses but not significant deficiencies. So both columns said material weaknesses but not significant deficiencies.
Are these the answers?
Yes,
Okay.
that's answer A. Answer B, both columns are the same, and both columns should say both significant deficiencies and material weaknesses.
Both?
Both significant deficiencies and material weaknesses, and that would go in column 1 and column 2. That's choice B. Both in column 1 and column 2, both significant deficiencies and material weaknesses. Choice C, column 1. This is the audit committee one. Material weaknesses but not significant deficiencies.